What can a mortgage refi do for you? My name is Alex, and on behalf of Copper State Credit Union, we are so happy to have you. I have a few items to review before we get started. Our session today is scheduled to last about 30 minutes. The recording of today's event will be sent out to you via email and will also be located on our website. Please take a moment to find your Zoom toolbar, likely at the bottom of your screen. We want you to be able to participate as much as possible during our session today, so we want everyone to be aware of the features available. Q&A. Please type your questions for the speaker here at any time throughout the session. You can click the anonymous button if you don't want your name attached to your question. If we need to send you any links during the session, you'll find these in chat. Lastly, I want to point out the polling feature. You should see a poll popping up here momentarily. Please respond so that we know a little bit more about our audience today. Thank you. Now, I'm excited to introduce our speaker, Christina Credit. Christina is Copper State Credit Union's Financial Wellness Program Manager. She's been with the credit union for 4 years and loves her current position. Christina has lived in the Phoenix area for 9 years since moving from Pittsburgh, Pennsylvania. She loves listening to audiobooks and enjoys camping with friends and family, as well as working in her garden. Financial fun fact about Christina: most of her lunch money goes towards fried pickles or ice cream. Christina, I'll turn it over to you.
Awesome. Thank you so much for that introduction, Alex, and so happy to have everyone with us today. Before I get started with our mortgage refi content, I want to talk about our credit union. If you are new here, I just want you to meet Copper State Credit Union. We are a credit union that is the product of a merger between two equally thriving credit unions back in 2019, Deer Valley Credit Union and Canyon State Credit Union combined, and then Southwest Healthcare Credit Union joined us in 2020, and we created our new name and brand, and here we are. So we are open for membership if you live, work, or worship in any of the following counties that you see here on the screen. And we have 7 branch locations that are open currently. We also have a GCU branch on their closed campus. And we serve over 40,000 members. We offer a variety of accounts and loans, online banking, mobile app, pretty much anything that you would expect of your financial institution. And we are here to serve you. We have a few core values that I find are really important to share, because otherwise it doesn't make a whole lot of sense why we are spending our time and resources just creating and providing this content to our members and our community. You don't have to be a member in order to attend these free webinars. So our core values really center along these 4 things: family, empowerment, excitement, and discovery. And these are important to us because we feel that although finances may sometimes seem boring, I am here to say that they are not. They can be very exciting, especially when you find a way to make your money work for you and find that empowerment when it comes to your finances. And we definitely have a big focus on family and really helping our Arizona families achieve success in whatever way that looks for you. So that is who we are. That brings us to our topic for today: what can a mortgage refi do for you? I want to thank you all again for joining us. And here is what we are planning to talk about today. I'm going to give a basic definition of a mortgage refinance, talk about some of those factors that are going to help you qualify, because, you know, on paper, yeah, mortgage refi, sign me up. But it's important to know what you may need to have in order to even qualify for one. And what can a mortgage refi do for you? I've got a couple of things here that we'll go over. And I will get into detail on those in just a moment. First up, I really like this definition of a mortgage refi, and I pulled it from daveramsey.com. Refinancing, it is the process of getting a new mortgage by changing the terms of the one you already have on your home. So essentially, your first loan is paid off through the refinancing process, and a second loan is created in its place. So people do this for a variety of reasons, and there's a lot of different ways that mortgage refinancing can serve you, and we'll get into those. But I just wanted you to understand that process. It's not having an additional mortgage. It's not having a second mortgage. It's transitioning the loan you have already into a new loan with different terms. So, can you qualify? Here are a few things that are going to be helpful when it comes to qualifying for a mortgage refinance. First of all, and I learned this firsthand when I bought my home, you've got to have pretty much across the board a 12-month mortgage payment history. So, you buy your home, you can't turn around 3 months later and refinance. The reason is it's just showing that mortgage payment history allows the lender to see that you have that experience, you have that history of being able to make that payment over time, over a good amount of time. And that makes it less of a risky transaction for the lender. Another thing that is helpful to have with a refinance is equity in your home. And that means the portion of your home that you actually own. Now, whether you put that money down to begin with, whether you've been making payments for several years and have slowly been building up that equity, some people are making additional payments on their mortgages. So say, your mortgage payment is $1,200, but you put an extra $300 on that every month. That is going towards your principal. So you're building up that equity. A third way you can build equity in your home is actually not something that you do at all. It has to do with the market. And here in Phoenix, if you caught my Facebook Live Q&A session with Greg last week, Greg is our chief lending officer, and he just mentioned that Arizona is outpacing the rest of the United States when it comes to home values, and that Arizona is actually growing in the double digits on a yearly basis for equity. So that part, if the value of your home is growing, that's another way that you increase that equity without really doing anything. So it'd be interesting, it's worth it to take a look at your equity position, or just really what percentage of the entire value of your house do you actually own, free and clear, or is already paid off. Another thing that's helpful to qualify is regular income. And I say helpful, but really kind of required. That's something that people are going to look at with any loan. You've got to be able to prove your income and prove your employment. This is a little trickier for small business owners, people that are self-employed. Hopefully you've got a history there, because that helps, but that regular income is so important, because of course we don't want to be giving out loans if people are unable to repay. And then the last thing is you do want to have a decent credit score. So what I would recommend, if your credit score is, below the 620, 630 range, that you start to do some really simple things to boost your credit. And people are always surprised to hear this, but you can actually increase your credit score significantly in 6 to 12 months. This isn't something that, takes years and years. You can actually work on your credit in a very short-term way and see results. Some recommendations I always give for credit score are to check your credit report. You get a free credit report every year. And I think with COVID, they actually made it more frequent than that. But check your free credit report for errors, because sometimes an error on your credit report is just whatever institution reported it to the credit bureau, they made a mistake. And it's actually negatively impacting your credit score and your finances because that error is on there. So check it. I believe it's just freecreditreport.com or maybe my free credit report. The other thing is we have an awesome tool in our online banking that gives you your free credit report as well as your score on a regular basis, allows you to keep tabs on it. And you can just sign up for free in our online banking. The other thing that helps with credit score is just regular payments, making those payments on time for your loans, not getting behind and having late payments. So just a quick quick talk on some of the things that will help you to qualify for a mortgage refinance. But now I want to get into some of the things that a mortgage refi can do for you, because that's what we're here for today. And I want to ask you, because this first one is about saving on total interest. So I'm going to send out a poll question and see what you all think. So getting a 15-year mortgage term instead of a 30-year, so rate is the same. How much do you think it could save you in total interest paid? All right, I had one person get the correct answer on this. As shocking as it may be, you can save over $100,000 on total interest paid. And let's get into this a little bit more. So saving on total interest paid, what you're going to look for is, first, shortening the term is a great way to do this. And I want to just demonstrate with a very quick side by side. This is one of the mortgage calculators that we have on our website. And what I'm going to do is I'll keep the home price at kind of around the Arizona average right now, which is $300,000. And we'll assume 20% down. And I'm just going to have this 30-year right here. And I'll put it at 3.5 for the interest rate, because we did just recently have a slight increase in rates. They've been low for quite some time because of the Fed cutting rates back last year around COVID, and they've kind of kept going down for a while. But let's just assume that we have a 30-year mortgage. This number right here is the interest that will be paid on that loan over the course of 30 years, okay? 147, so about $150,000. I know that sounds crazy. Your home itself only costs $300,000, but over the course of 30 years, it adds up. So this is the total interest you would pay for a 30-year term. Let's just move this slider down. And now take a look at that number, even if the rate didn't change. So normally lower loan terms lead to lower interest rates, but let's just keep it the same and take a look at that difference. This is about 70,000. So that is a huge, huge difference in the amount you could save over the course of, from a 30-year to a 15-year. It is it is pretty significant. And of course, you know, if you were paying, let's say 4.6, let's take a look, 203,000 in total interest paid, down to 92. So with this interest rate, you're saving over $100,000, which is pretty crazy. And Alex, if you wouldn't mind just sharing the link to this calculator in case any of our attendees want to check out that calculator on their own. And just so you guys know, on our website, we do have a lot of financial calculators that are really helpful. If you go to our website, and I'll just show you, go to copperstatecu.org. And if you go over to the About section and click on financial calculators, you'll find this one that I just shared and many more calculators and coaches there that could be really helpful. Back to our presentation. So shortening the term, you can see clearly the impact that makes. If you want to save on your total interest paid by like tens of thousands of dollars, you could do a refinance and shorten that term. I recommend it if you're able to do that. Now, of course, you know, you're probably going to have a little bit of a different payment situation, but that's what those calculators are for, because you can accurately, you know, or at least ballpark figure out what can I afford and how can I save the most interest, save on the most interest paid with the monthly payment that I can afford. So another way, another benefit, I guess, of a refinance, if you go this route and you want to save on total interest paid, is that APR reduction. So, you know, you may, for example, we had a 4.75 rate when we first bought our home. And, you know, you see 4.4 and you think, oh, like I should refinance. But really, it makes the most sense. It'll probably save you money overall, even factoring in the costs of a refinance, if you try to get at least that 1% APR reduction. That'll help to offset some of the costs. So that's a good number to keep in mind, is that at least 1% in APR or in interest rate reduction that you're using. And transitioning, another reason you may refi is if you have an ARM or an adjustable rate mortgage, you may want to take advantage of the very low fixed rates that we have right now. If your adjustable rate is kind of about to expire, you may want to refinance to lock in that low rate for a certain number of years. So mortgage refi, what can it do for you? It can certainly save you on total interest paid. That is a nice benefit. The next benefit I want to talk about today is to increase your cash flow. And cash flow is just, you know, you have a certain amount of money coming in each month, certain amount of money going out. What's the flexibility there? Are you having to spend every single penny that you make every month, or is there a little bit of flexibility, a little bit of extra left over? So that's what that cash flow is. So a nice benefit of refinancing in some cases is it will increase your cash flow. Now, two of the ways this can happen is to drop your private mortgage insurance. If you don't know what that is, it is basically the insurance that protects the lender, whoever your mortgage company is, in the case where you were to not be able to make your mortgage payments. So it's kind of insurance for the lender, and it is usually required if you put down less than 20%, or if you have less than 20% equity. But let's say, you know, you've owned your home for a couple of years and you've built up the equity, the value has gone up, and you know, oh yeah, with the new value right now and what I've paid into it, I have 25 or 30% equity. So in some cases, like if you have an FHA loan, you can refinance to a conventional mortgage and you can get that PMI dropped off. That PMI is anywhere from 0.25% of the loan amount up to 1% of the loan amount every year. That is a significant cost. It's not like, $5 a month, or I guess sometimes it is, depends on the loan amount, but it is a significant cost. You can also increase your cash flow if you are getting a significant drop in your rate. I know that my dad told me when they bought their house in the 80s, I think, that their original mortgage rate was 9.5, something like that. And, if they're able to refinance that in a couple of years down to 5%, that's a huge, huge difference in the rate. And they're going to be saving money, right? That's going to save them money, increase their cash flow. And also keep in mind the rate that you are able to qualify for is directly dependent on, well, not directly, but it's somewhat dependent on your credit score. So as you increase that credit score, every 30 to 60 point bump you get, you're now able to qualify for a little bit lower of a rate. So that's another reason why it's a really good idea to keep an eye on your credit. But these are a couple ways that would really increase your cash flow each month. And something that you'll hear, which I don't necessarily recommend, people want to extend the term of their mortgage in order to increase cash flow. So let's say you've got 20 years left on your mortgage. People want to go and refinance that up to a 30-year again because it significantly lowers the monthly payment. So, I have $200 or $300 extra every month. That would help me so much. But it's not the best long-term financial move. It feels nice in the short term, but you could be paying tens of thousands of dollars more in total interest paid, just like we saw in that example. We went from a 30-year to a 15-year. Well, it goes the opposite way. If you extend your term, you're paying way more overall, even though you're getting that monthly payment reduced. So that is something to keep in mind when it comes to monthly cash flow. Next up, what can a mortgage refi do for you? Well, I was thinking about this, and if you don't plan on sticking around, your mortgage refi can't really do much for you. So that's a funny way of saying, make sure you plan on being in the house for a couple of years, because think of a mortgage refi kind of as a race to the break-even point. And when I say break-even point, I'm talking about the point where you've kind of made up for the costs and you're beginning to save money. So for a mortgage refinance, you'll see a lot of numbers out there like, it costs 3 to 6%. The reality is that it costs about $2,400 up to about $3,000 or more. That's kind of an average cost for a refinance. And to be able to recoup those costs, you want to be sticking around for a couple of years and get to that break-even point. So if you're planning on staying in the house for many years, 5 to 10 or 15 or more, forever, this isn't an issue for you. But it's not the best idea to refinance if you're going to be, selling the house or moving again in a year, in most cases. And of course, everything that we're, chatting about right now is, in general, in most cases. Every single individual is different. Every situation is different. And that's why it's a good idea to have a mortgage specialist and work with them one-on-one to look at your financial situation if you are considering a refi. The other thing to consider, what can a mortgage refi do for you, it can cost you, right? So we talked a little bit about the fees. It can also cost you a bit in resetting or like restarting your amortization schedule. Now, that's a big word, but in simple terms, it's the schedule set up where your money, it tells you where your money is going each month. So at the beginning, when you first get your mortgage, most of your money is going towards interest. As you go on later in the term, then that same payment you're making is now going more towards principal. If you are 5 years in to a 30-year mortgage, so you've got 25 years left, realize that if you go back to a 30, you're kind of resetting that. You're resetting that where you're going to start paying everything towards interest up front again. And for some people, that's totally fine. But it's just worth being aware of. And a nice recommendation here, at least Copper State Credit Union does this. I don't know if every financial institution would do this, but we actually will work with you to make your new mortgage. So if you would do a refi with us, we would make your new mortgage for the remainder of your current term. So for example, if you refinanced when you were 12 years into a 30-year mortgage, so you had 18 years left, we'd be able to give you a mortgage for exactly 18 years. So you're still resetting in a sense that you start paying that interest, more interest up front, but you're keeping that same term that's left. And again, this stuff is very dependent on individual circumstances, but it's worth looking into if that sounds like you. The last kind of thing that a mortgage refi can do for you, and the reason I have this on here is because we're hearing so much about it right now, is taking cash out from equity you have in your home, especially in Arizona because home values are pretty high right now. This is something that people are talking a lot about and a lot of people are taking advantage of. It sounds like, such an awesome idea. Why not? Why not take cash out of your home? The rates are pretty low, but you want to be careful. In some circumstances, it's going to be a great choice, using that home equity to, pay off high interest debt. That may be a really good choice for you, or to use it for home improvements. That may be a really good choice for you. But what you want to watch out for is taking it out for no reason, or if you don't have a plan. You still have to pay it back, right? Whatever cash you take out of your home, you're paying that back, and your home is on the line. Your home is literally standing in as the collateral for that loan. So if you do it, make sure it's a valid reason and you can manage the costs and the payments that are associated with it. The specific thing that I want to mention is if you're using a cash out refi to pay off high interest debt, like say credit card debt, you're paying, 20% on a credit card that's got $15,000 or something, that's great and you will save a lot in interest. But if you don't have a plan to keep from spending and running that credit card up again, it's a very slippery slope. If you pay off that credit card with a home refi and then you build up more debt, you can only go down that path for so long where your debt to income ratio is too high and you can't make the payment anymore. And unfortunately, people end up in bankruptcy from that. So you want to be really careful there. Consider the term as well. So if we have people who say, oh, I want to refinance to get my car loan. Well, your car loan only has 5 years left, right? So are you good with taking that amount and putting that back into a full 30-year term? So, really wanted to take a look today at refinancing, and really from all angles. There are some really amazing things about refinancing, and for some people it is absolutely an excellent choice. But I think it's worth knowing the items to plan for and to look out for to see if it's really a good fit for you. So that is about all of the content that I have planned for today. So I want to just point out a couple of things. We do have a survey that is coming your way. You should see it on the exit page, but it'll also come over as a link in an email following up this session. And we also have a free download for you. I forgot to mention, we have a free download. It's a Should I Refi quiz, and some really helpful guiding questions on there for you individually. Hopefully you find that helpful. That will be coming, I think, once you take the survey, it gives you that quiz as a download. So thank you, everyone. I'm going to go ahead and pop over to the Q&A and see if we have any questions. Doesn't look like it, but I will hang out for a minute here and see if anyone has a question before I sign off. Hopefully you guys found this information useful. What can a mortgage refi do for you? And you feel more confident doing your research as you move forward. Good luck.